One of the biggest challenges facing companies operating in or sourcing from Asia in 2020 will be the pressures from shifting supply chains. These pressures stem from changing operating costs, varying levels of development in new markets, and political risks, which will grow in the coming year. This makes it essential for companies to more carefully consider supply chain shifts in their business strategy for 2020 and beyond, and ensure that their business decisions are informed by a thorough understanding of the different drivers of these supply chain shifts. Dramatic media headlines about China's transition away from being the workshop of the world at times create a misleading impression that waves of companies are suddenly leaving China. The truth is, of course, a lot more nuanced than that. Yes, companies are relocating from China and have been for some time. This is due primarily to rising operating costs, above all wages. Tariffs stemming from US-China trade tensions are also amplifying cost considerations for companies, particularly in export-oriented industries. However, companies are also relocating because China's maturing regulatory environment and industrial policies are increasingly focused on cleaner, newer industries that are displacing, for instance, more emissions-intensive industries to less stringently regulated jurisdictions. Media have increasingly focused on the politicization of supply chains in China, particularly affecting technology companies. While we think this is a big risk to watch in the year ahead, especially around US-China decoupling, it's only led to limited supply chain shifts to date. That's because there are still many reasons companies want to remain in China. Above all, the size of the market, which most companies here are producing for. Benchmarking other countries' operating environments against China also reveals a very mixed picture of risk and opportunity. The primary relocation destinations have been in Southeast Asia, and those countries present a wide range of labor quality, investment incentives, corruption and security risks, as well as their own potential for disputes with the US that make relocation a costly and uncertain venture. The reality is therefore a very mixed picture of risk and opportunity if companies are considering relocation, but one that companies must take a closer look at if they want to avoid supply chain shocks in the future and ensure they remain competitive in the region and globally.